how to buy a house on a Social Security benefit.
But first, let's hit it. Hi, this is Alan Victoria. Welcome to our Talent Podcast.
And if this is your first time in our podcast and our channel, please subscribe and also get notified when we put a podcast and video for you.
Honestly, we get calls, texts, and emails all the time at 252-327-3357. So don't be shy. We're absolutely happy to talk to you all the time.
Yes, without any further ado, we is gonna start this discussion. Basically, we have two types of the Social Security program that provide for the individuals with the disability benefits.
Or age.
Yes. Therefore, what they are.
Okay, so SSDI is Social Security with Disability, and of course, and then you also have your Supplemental Social Security Income, which is SSI, which is for our retirees.
Therefore, the question is here that does the Social Security prohibits you basically from buying a home? What is the answer?
The answer is absolutely no.
Yes.
Yay! So under either SSDI or SSI, you can use your monthly statement as a proof of income in order to buy a home. Your disability payments, as long as it can afford the payment, or your Social Security, as long as it can afford the payment, can absolutely be used to qualify.
But the Social Security SSI basically recipient could run into trouble if they try to save up money for a down payment. No?
Yeah, there is no limit on assets for SSDI.
Yes.
But there are assets. There are SSI recipients are under certain restrictions. I think the opposite. SSDI does have profit income limits. So SSI has $2,000 for single person, $3,000 for married couples.
Yes.
But your categories of assets are what?
Sorry?
Your categories of assets.
I don't know. Can you share with us?
Including your principal resident and your home site can be used as a benefit and as a cost, because you do have to live somewhere else. If you are receiving more than $2,000 to $3,000 a month with SSI, there definitely could be starting to suspend your benefits. But congratulations, that means you're still making money. So I think that's awesome.
Therefore, now the question is, will bank or your lender basically give you a mortgage to either on SSDI or SSI that we were talking about? Therefore, what they does? Yes.
Oh, yes. The lender absolutely is going to look at that application very eagerly, because it's pretty easy income to prove. All you need is that benefit letter from the SSI department, from the Social Security Administration. Sorry, AI. It's proving your documentation, and they're good. What's the problem? What's the caveat?
The caveat is what?
Let's just say on the average, the average person is getting $1,300 a month, which means now this can be a problem when. If you're getting $3,000, you should have no problem buying a house, at least in our area.
Average between $1,300 to $3,000, you might not run to the problem at all. You have a sufficient income. But if you are on SSI program and you're just getting like a $500 or $600 a month, that we might run to the problem.
We're going to run
it's difficult
because it's just. How do you buy a house on that? How do you pay the monthly payments with that small amount? So this is where it comes into play.
Yes.
So it's really just depend on income and back to that debt and stuff like that. But let's get into, what is it?
Basically, we wanted to talk about what type of programs now helping you with this ability to buy a home.
Right.
And there are several actually federal, state, local, and private organizations that actually can help you. And some of the national program that we gonna say in this video and podcast, first is Home Ready Mortgage from Fannie Mae.
Right, that is just a very specific one that you can go online. You don't have to be, allows a non-resident cosigner also to be guaranteed. Yes. You need 3% of sources coming from your own savings. Another one, the more common ones are your VA loans.
Yes, VA loan, basically you should be veterans and eligible for this type of the loan, but the good thing is they waive the down payment and also they waive the funding fee.
Also, USDA loans, which we've talked about, we have in our area. FHA loans, we have some video on that. Also,
USDA loan is very good for many of you because in this area in North Carolina that we have is subsidized for low income people to cover the payment, and they have a generous repayment term for disability.
Your credit has to be awesome. FHA is another one. Another one that people don't think about is you're going to be your HUD Home Choice voucher from Section 8. Actually, as a kid, my mom had Section 8 housing vouchers, so this helped us buy our first home. So I absolutely know this housing voucher can be used. If you are disabled, you can absolutely get this housing voucher. Typically, you use it to pay for rent, but you can also use it to get a mortgage.
Exactly.
So people don't always think about that. Talking to the HUD agency and saying, hey, how do I buy a house with this? So if that is you, don't forget that question.
Number 6 is going to be Habitat for Humanity.
And number 7 is Homes for Our Troops. Those are just little small group, nonprofit organizations. What's the next question?
Now the question is how you can save for the down payments.
Right.
No? Because many of the mortgage lender, they have a system program that allow you the money other than what you save in your saving account for the down payment. And the question is that there are some options actually for you for making a down payment. What are the options?
The number one that we see many people using is a free gift of friends from friends and family up to $1,600.
No, $16,000 per year.
$16,000 per year.
So as a tax-free gift.
It's tax-free. They're willing to sign the waiver that says that this is an interest-free. So that is actually I did number 2. You were talking about number 1.
And number 2 is
I did the family and friends, and you jumped in with that $16,000.
Okay, what is the number 2?
No, you tell me number 1.
Number 1, basically receiving money up to $16,000 gift from your family member.
You can borrow from your family and friend as well, but these will turn into loans, and that can be where things get dicey. Number 3 that many people don't think about, you can withdraw from your 401k or your IRA. There can be tax penalties, but there are tax exceptions as well if you're buying your first time home.
Definitely, you need to talk to your lender if you can exempt as a first time home buyer from the tax.
Now, this is a very specific subset. If you already own a home and you will need to move to another, of course, you can use that equity in order to move to another. Another one is you can buy with a family member or a friend together.
If they wanted to live with you, basically.
Right. So that is just another option.
And the next question is basically the credit score that you need. Therefore, the first thing that is super important, you should make sure that you don't have a late payment on your credit card or substantial debt. Because with the credit, also we need to talk about debt to income ratio, which is super important. But for we have like a FHA loan, to be honest, that it comes from the government, and you need 580, no? Mm-hmm. And 3.5% basically down payment. What about the conventional?
Conventional, if your credit is 620, then of course you can look at things as low as 3%.
Yes, and basically debt to income ratio for the different loan is different. You need to talk to your lender, but general rule of thumb for FHA is 43%. For basically conventional,
these numbers are weird, right? So let's talk about it. Okay, to me, I don't understand these whole percentages. My husband loves them. I just kind of want to throw in here. So I understand that part of the debt is going to be the front end that they're thinking is how much is this payment going to be? That includes my mortgage payment, the interest, the housing insurance,
and
like the payment, the HOA. That's one that they're considering. The other end of it is what?
The other one basically is the back end ratio, which is your credit payment, your car payment, your personal loan, your student loan. These are all basically the type of the DTI. Therefore, the mortgage lender basically use all these numbers. You look at how much credit card payment you have per month, calculate car payment, he sum it, mortgage payment, he sum it to this number, and also on top of that, the property tax, insurance, and the taxes of the house that you are buying. Therefore, he's gonna sum all these numbers together and divide it by your gross income per month. So
I hope this video was useful. We can't wait to, if you need to talk to a lender, we'll happily introduce you to ours. So don't call us at 252-327-3357.
See you on next podcast and video.